value, so that you all can have a better so that you can have a better experience. Whether that be trading, whether that be building. What we have for today is our liberty. I don't like that phone, but we have our liberty today. So we're gonna dive a little bit into liberty, how it works, and things of that nature. There's a couple things that I'm gonna do before that. Um, but just stay tuned. Take out your notes, take out your pens, take out your pads. And what I'm gonna do for this call, specifically, is I'm gonna make this a little bit interactive. Is that bothering you? Like, can y'all hear me all right? Is there too much background noise? Because I can go ahead and I can shut the door. Y'all let me know. Let me know some in the chat box. Am I good? You open up the chats. Y'all good? Y'all listening? What's up? Let me know some in the chat box. Is the background noise too much, or do I need to go ahead and I just shut the door? All right, cool. So what I'm gonna do is I'm gonna make this more interpersonal. I'm gonna make this more interactive. So I'm gonna go ahead for if it's too many people on here, then I'm gonna go ahead and I'm gonna shut it off. But for the people that we have on the call to make this a little bit more closer of an experience, so I'm going to unmute the lines. Now, do not abuse it. Do not act crazy. You straight, you straight. But do not act crazy. I just want to do this so that if y'all have any questions, you want me to go back over something, it's cool. And it's more of a one-on-one group type of thing. So, first thing I'm going to over is we're going to go over two things. So, if you're writing this down in your notes, we're going to be going over support. We're going to, all right, two things. We're going to be going over market structure and candle structure because Liberty works solely based off of that. If you don't know nothing else, and if you know market structure and candle structure, you're going to be just fine in Liberty. And I'm going to go ahead and I'm going to explain what those things mean. But in the meantime, I just want you to write that on your paper right now. Because with first what we're going to talk about is market structure. So I'm going to pull out my whiteboard because it's too little of information to go on the big whiteboard. So I'm gonna put my whiteboard. We're gonna talk about market structure. It needs to be closer. I like that. All right, cool. Market structure. So
So
what
that
is market?
is zones down to find it out to see.
Somebody, y'all stay on mute right quick. Hold on, I'm trying to go through this. All right, so market structure. What is market structure? For the sake of this, we're gonna talk about support or resistance. We're going to talk about support or resistance. Then candle structure, we're going to talk about how candle structure plays into support or resistance. So market structure, support or resistance on a more basic scale. So what is support and what is resistance? So for this, I'm going to color code it. So for my red, I'm going to draw a red line. For my blue, I'm going to draw a blue line. And I'm going to put a little chart. So red is going to be equal to your resistance, and blue is going to be equal to your support. All right, cool. So in a more basic sense, what's the best example? I'm gonna just do it this way. So imagine that this is the market. This blue is the market. Matter of fact, I'm gonna make it black. This black is the market. So on a basic scale, this is all that the market does. It just goes up and goes down, goes up and goes down. It may do a little something like this, but eventually it just goes up and goes down. And the reason why these 2 points are so significant is because if you notice, this point right here is like it just keeps rejecting. It just keeps bouncing off of this point. That is why it's called your resistance. Because when you're looking at the word resistance, it means to like keep something away from something else. So imagine it like a ceiling. So if I stand up and I jump and I hit my head on the ceiling, I'm gonna come back down because it's the ceiling. And if you have a trampoline where the blue is, if I have a trampoline, if I jump up, I hit the trampoline, I'm gonna bounce back up. The same thing happens right here. Like resistance training. Resistance training, you're going off of that tension. At a certain point, you cannot go anymore. So guess what? It goes in the opposite direction. And that is the same exact thing that happens in the markets. And that's your resistance. Now your support is that's the word is self-explanatory. It just supports you. Think of it like the ground. Think of it like a trampoline. And in a more advanced standpoint, you can think about it as in the sense of a trampoline. When you bounce on a trampoline, you're gonna come back up. But the harder you go down into the trampoline, the higher you go back up. And then on an even more advanced scale, if you put too much pressure going down, you're going to end up bursting the net. And the same thing happens with the ceiling. If I jump up hard enough, I'm going to go through the ceiling. And I say that analogy a lot because it really works perfectly in the market. So let's say that I have a trampoline right here for my blue. Let's say for the sake of the example that this is a trampoline. And price being where it is, it hits the trampoline, moderate force, it's gonna bounce back up. But let's say it comes back, it hits it harder. It's gonna shoot back up farther. And guess what? The cycle repeats itself. And let's say that, price comes all the way down to the point where it bursts the net. And then something like this will happen. And then something like that will happen. And then I'm not gonna get too advanced, but that's just a simple way to put it. And for resistance, the same thing applies. So if I'm coming right here and I'm at my resistance, eventually I could bounce off, I could bounce off, but eventually I'm gonna come so hard at the ceiling to the point where I go through the ceiling. And if something like this will happen, and something like that will happen. But I'm not gonna go too heavily into this. What I want to focus on, excuse me, is this. I want to focus on this. So, based on what I was just going over, does support and resistance make sense? Go ahead and type a 1 in the chat box if support or resistance makes sense. All right. I see one person putting a 1. I see a few more people. Where everybody at? All right. All right. I see a few more people. Cool. All right, cool. Now that we went over support or resistance, the next thing we need to go over is we went over market structure, but now we need to go over candle structure. And trust me, this is all stuff that you're gonna need in Liberty, especially with Liberty. All right, candle structure. And for candle structure, I'm going to go ahead and I'm going to pick a new one. All right, so let's say that I have my resistance, and then I have my support. All right, let me make this. So right now we're going to talk about candles and how they play a part. So if you look at a chart, more specifically, let me pull it up. If you look at a Forex chart, it'll look something like this. Let me go ahead and reshare. It'll look something like this. This is what a chart will look like. And you see all of these, red and green pigments. They're considered candles. And each one goes up and down over a particular period of time. And what we're going to talk about is what these candles, let me rephrase that. When these candles make certain motions, what they mean as it pertains to support or resistance. That's what we're going to talk about for the next couple of minutes. All right. So let me go back to my whiteboard. Share whiteboard. Cool. So let's say that I have a blue candle, something like this. I have a blue candle, blue, then does something like this. Boom. So when you see some blue candles like this, that means it's going in the upwards direction. If we have any new members on here, in simple terms, blue is up. Blue means buy. And then red means sell. So when I put the blue candles, that signifies that it's generally going to go in this direction. But what we're going to talk about is what happens when it hits this line. But before I do that, I have to give you the anatomy of a candle. I know this is going to be kind of a tangent. I know we're supposed to be talking about Liberty, but this is going to make Liberty so much easier when you understand this, especially coming in. So let's say that I have a blue candle. This is a regular blue candle, and I'm going to break down what everything means so that when you hear it on Go Live, when you hear it, when your mentor is talking about it, you're not confused. All right. And then all right. So, and then I'll do something like this too. All right. So this is for a blue candle only. So when you have your notes out, make sure that you put that this is for a blue candle only. So on a blue candle on the top, matter of fact, I missed one right here. So I'm gonna go from top to bottom. So in this case, on the top left, we're gonna look at this little stick coming out of this candle. This little stick coming out of the candle is called a wick. What a wick is irrelevant. Just know that that is called a wick. And basically what a wick means is that in some point in time, this candle was like this, but price went down, and stopped right there. Therefore, creating a wick. The next thing is this top right here. This is the close of a blue bull and I'm gonna explain what this means. So in simple terms, this is the close of a blue candle. But when you're on Go Live, when you're getting educated on these types of things, some people are gonna say it a little bit differently. Some people are gonna call this a bull candle. Some people are gonna call this a bullish candle. All of it means the same thing. Whichever terminology is the easiest for you to understand is the one that you should use. But just know that the top portion of a blue candle is the close. Now, let's go to this middle part right here. This middle is the body of the candle. So just like you have the top, you have the bottom, you have the wicks, you have the body. Now the body doesn't have any, other meaning other than it just being the body of the candle. So that's kind of easy on your part. All right, cool. Next is this last one right here. This last one is the opening of a blue bullish candle. So most important part you need to take away from this is that this right here, this portion is the opening of a blue candle. Reason why I say this is the opening of a candle, of the blue candle per se, is that, remember, a blue candle is supposed to go up. So if a blue candle is supposed to go up, the opening cannot be right here because it can go up no further. It has already been to this point. So the opening is down here so that it shows its upward progression. And that's why this is the close, because the candle can, in theory, go way up here. It can go way up here, but it didn't. It came right here and then went like this. Boom. Now, this bottom has a significance too. This is called a flat bottom candle. Now, we're going to talk about two different kind of candles. We're going to talk about flat top and flat bottom. Since we're talking about a blue candle, we're going to talk about flat bottom candles. And basically what a flat bottom candle is that the opposite party has zero power at that particular moment. So what I mean by that, in the foreign exchange market, it's in the name. Buyers and sellers are constantly exchanging. That means they're both almost always present in the market. So if you see a flat bottom candle, that means that the blues are winning and that the red has no power at that particular moment. And if you're looking for a buy, that's good for you. If you're looking for, well, I'll get into that in a minute. But flat bottom candle just means that the sellers have no power at that particular moment. So let's go back into it. A wick. A wick is just a stick coming out of the candle, which means that the candle was once at that point, but came back down to the point of its close, which brings me to my next one. The top of a blue candle is the close of the blue candle. There are other ways to describe a blue candle, a bull candle or a bullish candle. Either one, it really doesn't matter. Once you start getting more advanced, people don't usually use blue candle, red candle. They tend to use bullish, bearish. So that's why I added it in there for those types of people. Next, you have the body of the candle. Little to no significance, just good to know. Next is the opening of the blue candle, bullish candle. Next, flat bottom candle means that the opposite party, aka the sellers, have no power at that particular moment. Now, with that being said, does the anatomy of a blue candle make sense? Go ahead and type a number 1 in the chat if the anatomy of a blue candle makes sense. All right, I'm seeing some ones. I'm seeing some ones. Now, we're going to go into a red candle. And I'm going to make this brief because we've already been through it. So, boom. So I'm gonna just go through it really quick. Just like how we just got through talking about a flat bottom candle, this is a flat top candle. Notice how there is a correlation between the colors. So whenever you see a flat top candle, it is associated with a red candle. Always, always. It will never be any type of confusion. Whenever you see a flat top candle, it is associated with red. It is associated with selling. Whenever you say flat bottom candle, it is associated with buying. And that's going to come in handy, especially in Liberty. But next thing is the body of the candle, which is this. This is the body of the candle. And this is also the opening of a red candle. Because remember, a red candle is supposed to go down. So that's why this is the opening. This is a flat top, and it is the opening of this candle. This is the body of the candle. Little to no significance, just helpful information. This is the closing of this red candle. This is the wick of the candle. What is a wick? It just signifies that at some point in time, price was way down here, but it came back onto the point of its close, therefore creating a wick. Wicks aren't going to be too important until you get into the advanced level. Once you get into the advanced level, that's when wicks are starting to play a major part in what's going on. But for Liberty, what we need to focus on is we need to focus on flat top and flat bottom candles and the opening and the closing of a candle. And this is why that is important. Because let's take these blue candles, for instance. See, you can kind of tell. See, in the market, you can never be 100%, but you want to get as close to 100% as possible. And this is a trick that I picked up that's going to take you a long way when it comes to spotting what's going to happen in the market. So let's say this is a point of resistance. If a candle closes, let's say red, for instance, below a point in structure, the next candle is going to open below that point in structure. What do I mean by that? So let's look at this. We see we have two blue candles right here. This one closed down here. And typically the close of one candle is going to be the opening of one candle within, a pip. So there's going to be kind of neck and neck-ish. So we're going to look at this candle right here, this blue one. See, this blue candle right here, remember, this is a blue candle. So the opening is down here and the closing is up here. So since this didn't close above this red line right here, the next candle is going to open below this point in structure. This point in structure being this resistance line. I hope that makes sense. If a point in structure closes below, if a candle closes below a point in structure, the next candle is going to open below that point in structure. So it could be like this, or it could be like that. But more than likely, it's going to be like this. Now, let's go on the other end, for instance. Let's go on the other end. Let's say this goes down for a little bit. Let's say this goes down. It goes down. It goes down. You see it. You see it going below. You see it going below. So you're like, okay, I should get in for a sell. So you, being the smart person that you are gonna get into a sell right here. But remember, Marquise taught you this little trick to where if a candle does not close below a point in structure, you know, in this case, it's gonna be above or below. So just pay attention. It's gonna make sense. So you're gonna get into a sell right here because you're like, oh snap, this is selling. And you notice that the candle is about to run out. So like, okay, it's below the point in structure. Hold up, somebody just joined. All right. All right. So you notice that, this is going below because the candle is going to run out. But remember, Marquis said if it closes above or below, that's going to tell where it's going to go. That's a good bar. You should write that down. So you see it going down, you see it going down, you see it going down. So you get into a sell. Then you start to see it kind of go like this. Kind of see it go like this, go like this, go like this. Therefore, creating this wick. I know somebody has seen that before. I know somebody has seen that before. Where you see in the market come all the way down here. So you're like, yo, I need to get into the sell. Then it's creeps back, creeps back, creeps back, then boom. Now it closed above this line. So now this next candle is gonna open above this line. And that's why this trick comes in so much. That's why this trick comes in so handy. And the same could have happened on the flip side. On the flip side, this could have happened. It could have closed down here. Then the next candle that would have popped up would have started down here. Let me make this red so that it's cohesive. And it could have did something like this. So when you're on midnight snack and you hear some of the traders say, oh, I want to see if it closes, above that line or below that line, this is what they're talking about. And it's going to play a huge part when it comes into your trading. Now let's look at it in the live market. Well, obviously not live right now since the market is closed. We're gonna take this for instance. Let me share it with you. All right. So in the case of this, I'm gonna get rid of all this. All right, in the case of all of this, I'm trying to find an example for y'all. All right, this is a good example. All right. This in particular is the best example. This right here. Let's take a look at it. And this one happens a lot. So you see this red candle right here. Goes down, it goes down, it goes down. It closes below my point of structure. And then guess what happens? The next candle open below this point in structure. So I would never look for an entry from this candle way up here. I will look for it down here on the way back up because I know that this is my support or resistance. See how it came in, but it didn't break the net of the trampoline. So it came back up. These are all different tips and tricks that you can use in your trading to take positions that would have never been there. Like this, you probably would never see this called out on the strategy. But now you know. And guess what? This red candle closed below this line. So the next candle is going to open below this line. But guess what? I'm at my support. So guess what? It's going to come back up. And that's why I went over this before. So that when you go into, your Liberty scanner, let me log out of the one on here. When you go into your Liberty scanner, everything is just so much easier. And we're gonna go pretty briefly on all of them, just so you can, make a little bit of sense out of it. So we're gonna go with the OG Simple Scalper. This is where most of that is gonna make the most sense. I like 5 minutes. We'll do 15 minutes because we want signals. All right. So I want to point this out. Remember how we just color coded it. The blue is the support, the red is the resistance. The technical name for these is going to be your Bollinger Bands. But I'm just going to point out all of the support and resistances so that this makes sense. So we just went over the red and the blue. That's kind of self-explanatory, the Bollinger Bands. But you see this line right in the middle? This can act as a support or a resistance. So take that into consideration when you're looking at the market. So let's go ahead and let's take this for instance, this scenario. Would I have taken this trade? Probably yes. I'm gonna go over it right now. Actually, I'm gonna use a rectangle. This trade right here. I'm gonna look at this setup since right here. All right, and I'm gonna kind of break it down. All right, so let me go ahead and I'm gonna. Look, you see this red candle, red candle, but it never touched this support down here. It never touched it. So guess what? I'm wait till the next candle, and guess what? Sure enough, it opened above this support right here. So you're gonna wait to see how it plays out. You see that it's red. You see that it goes past this blue right here. Now, this is where I start to become interested in this trade because guess what? It goes through. So now I'm going to be like, on midnight snack, how they say, oh, I want to see if it closes above or below. If it would have closed above this line, I probably would have still taken it for a buy, but even more so right here. It closed below this line. So I know that this next candle is going to open above this line. I mean, below the line. And that's exactly what it did. You saw that it was red for a little bit. I probably would have taken it someplace down here because if you didn't know, it never goes too far outside of these lines. And I'll go through what that means in a second. It never goes too far outside of the line. So I wouldn't have been worried about it. I would have seen that, guess what? It needs to come back up because this is my support. And guess what? This opened below. This is red. You want to buy when it's low. You want to buy when it's lowest. Guess what? You would have got you a quick trade in that was never called out. You just knew that based off of, market structure. Even if you look at the strategy technically, which I would go into here in a second, this is oversold heavily. This is oversold. And this next candle gave you incentive to buy. Well, let's go over the strategy. This is the simple scalper. Now, the simple scalper probably isn't the easiest strategy on Liberty, but is the most conducive to what we just learned. So, first thing you want to point out, this purple line right here. If these candles are above the purple line, you're in an uptrend. If the candles are below the purple line, you're in a downtrend. And you kind of want to stay away from trading against a trend. So in this case, you will be looking for mostly buys. But next thing you want to look for, once you look for that, you want to notice where price is within these lines. So in this case, we're over here. It's towards the bottom. It's towards my support. And if it's towards my support, you know, the only way it could go is up, which is with the trend. So that's a double positive. The next thing that I would have looked for is these purple dots. See, the purple dots, they follow the market. It's going to show you really what trend it's in. Because if I take this and I go straight down, it's not going to lie to me. These purple dots are going straight down, and so is the market. Look right here. These purple dots are going up in a straight line, so is the market. Now, what you want to avoid is when it starts looking like this, you have to play connect the dots. That's what you want to avoid. So guess what? This is just a guide. Think of it like a guide. You don't really have to, you know, use these heavily to take a trade, and I'll explain why later. Or else you wouldn't find stuff like this to take. Now, next thing we want to go over is these bars down here. These are your volume bars. The bigger the bar, the more momentum is in the market. Momentum is the same thing as how hard you go into the trampoline. The harder you go into the trampoline, the higher you go. The higher you go in these charts means the faster you clear a trade or the faster you hit take profit. So you want these to be pretty big. These are your next indicators. These are your RSI, your stochastic. Excuse me. They mimic each other, but they're basically the same thing that we just learned. So we learned that up here on our red, we expect it to come down. And then guess what? On our blue, we expect it to come back up. The same thing applies, except we're looking for not only a, you know, little bounce off, but a bounce off is kind of like the second thing you look for. The first thing you look for is this cross up. This cross up is even better than a bounce, to be honest. So we're looking at this, look at a cross up. And that's pretty much it. The same goes for the bottom as well. So let's take the example that we were going to right here. That's why I said technically it made sense as well, but it wouldn't have been called out by Simple Scalper just because of where it is. So let's go over it. So we see the market come down past the support. That means that it's getting to the point where it has to go up. It's building up momentum. And guess what? If you come down here, guess what? It's oversold. Oversold just means that it's near the bottom. It needs to buy. Same thing down here. It's oversold. It needs to buy. And coincidentally, what do we see? We see a cross up here. We see a cross up here. And what we learned, we know that it's about to go up. We look here, we know that it's about to go up. We look at our purple line, we know that we're in an uptrend, so it's gonna go up. And that's what? One, 2, 3, 4, 5 confirmations that is going up. I would take it. That's just me. I would take it. The same goes for stuff like this. See, honestly, these are my favorite kind of trades to take because they're so easy to spot with market structure and candle structure. Look at this. Remember what I said, this black line can act as a support or a resistance? Guess what happens? Look at this right here. Look, this blue, you notice that it closes above the red line. Guess what? The red candle opened above the red line and came back down. You know it's going to come back down. So you could have just taken the trade right here. You would have cleared it and then some. Then guess what? You have this black line right here. I would have waited to see what this red candle would have done. If it closed down, I would have looked for, you know, maybe another sell or something like that. But guess what? It closed above. So that means that I could be looking for a buy position. And guess what happened? A buy position. Now, here's where I like it. Here's where I like it. And here's where I said that wicks won't necessarily come into play. And here's what I meant by it. Is in this case right here. This case. I'm gonna put a black. And then I'm gonna figure this out. Let's see who's still plugged in. If you still plugged in with me, go ahead and type a 5 in the chat. Because y'all about to get sauced. All right, cool. So check me out. Notice how this blue candle touches the red line, but doesn't close above it. But you see the wick go through it. See, the wick doesn't count. Only the open and the close does. So if you notice right here, the candle didn't close above this line. So guess what? This red candle right here opened below the line. And that's what I meant when I said that, wicks really don't count. Only the open and the close of it does. All right. Cool. So it's just more examples like that that I really like. You can even see in cases like this. Trades that you ordinarily wouldn't take, you can now take now. Because guess what? You learned a little bit about market structure. You look at this blue candle right here. You look at this blue candle. It never closes above this line right here. So guess what? I can look for the next candle to open below that line. And I could possibly take a sell position. So that's exactly what happened. Look at this. It did like this, came outside, closed outside, opened outside, came down. You could have even rolled over. This one would have been a rollover case, but I don't really too much like rollovers. So, you probably would have rolled and been okay, but the same principle applies. Oops. Let's look at some more. Even right here, you could have taken this. Not necessarily off market structure, but just purely off of the simple scalper itself. It came down to your support. Guess what happened? Your purple dots followed you. And this is another important thing about simple scalper. There's another trick. This is what we talked about before. Does anybody know what I'm looking at right here? Somebody let me know in the chat. What am I looking at right here? On the right track. On the right track. But it's about the candle specifically. It's about the candle specifically. What do you notice about the candle itself? You're right. It is a flat bottom candle. And this is why it's so important. Because when you have a flat bottom candle and you have a purple dot lined up underneath it, that's almost a guaranteed like upwards motion. That's almost a guaranteed buy. Almost guaranteed. There's no 100% guarantees, but like I said, you want to get as close to 100 as possible. So remember, flat bottom candles means that sellers have no power at that particular moment. And when you have the purple dot, it don't lie to you. So when it lines up, it lines up. And when you have a purple dot and there's nothing, down here, that means the only way it can go is up. If we look down here, you have a blue bar. If you look right here, it's oversold and it's crossing up right here. So by simple scalper definition, you could have taken this. And it's just trades like that I really like. Now simple scalper itself works best when the market is consolidated. When it's going, between support and resistance. When it's going between support and resistance, that's when the simple scalper works best. When a simple scalper when the market is doing like this, simple scalper can't really do nothing for you because it's just going on the resistance. So that is the simple scalper. I'm gonna go over simple scalper 2.0 is basically the same thing. It's just a little bit different as far as the indicators are concerned. You can still find trades using the same method that we just did. But the only difference is that, look, it gives you these little things, these sell buys. And then I'll go over this right quick. So this is called an oscillator. What you want is you want a bar, the color of the direction you want to go. If you want to buy, you want a blue bar. If you want a red, you want a red bar. Now, when you see this, oops. Where's it at? When you see this, that means that there is about to be a change in the market. When it's like it was above the line at first, but it's transitioning to below, or it was below transitioning to the top, that means that there's about to be a change in the market. All right. Now this one right here is kind of along the same lines. So if you notice, this changes colors. You want this color to be in the direction that you want to go. If you want to sell, you want this to be red, obviously. If you want to buy, you want this to be blue. And when they all match up, you can take that position. So in this case, blue, blue, blue. It would have been risky, but it would have been a valid position. Now, when everything doesn't match up, I wouldn't take trades. But this week has been kind of crazy as far as the markets are concerned. But the market structure we went over today is going to help you a lot in those circumstances. Now, I'm going to go over very, very quickly. Pickpocket. This is honestly probably one of my favorite ones. Just because of how easy it is. It's how easy it is. If this line changes colors, if the candles are above, you want to look for buys. If you get a buy arrow, and if the arrow above it was blue, take the buy. Like in this case, buy. I probably wouldn't have bought right here. In this area, I probably wouldn't have done that. But right here, I got a blue arrow. The arrow above it was for a buy. I would have taken a buy. Boom. If you get a buy arrow in the shadow in the same one, take it. And the same goes for below. If the candles are below the line, look for sells. If you get a sell and the candle above it was a sell, take it. If you get a sell and you have a shadow, if you have 2 cells in the shadow, take it. Look at this. Wow. Serious profit. Look. Sell. 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 I probably wouldn't have sold right here. Now, if this was right here, I probably wouldn't have sold right here. But look, sell, sell. Guess what? Sell. A lot of people, they get discouraged when they see blue candles, but it really doesn't matter if it's going in your direction. It's still going down. It doesn't matter if there's a blue candle. It's still going down. Because if you go to a higher time frame, all of this will be red. And then look what happened right here. You can look at this as a point in structure, support or resistance. It broke through, it closed, it opened, look for a selling opportunity, sell. This is probably this is my favorite strategy because it's so easy. Look, all of this sell right here, sell. It's easy. Same thing for web slinger. All right. What up? 15 minutes. All right. So there are 2 ways to take trades. A web slinger, market structure, no, candle structure pays off really, really well because web slinger has what I like to call a trigger point. Okay, so there are two ways you can enter the market on web slinger. You have where the candle crosses all the web strings for a massive sell. You can get in. Now, that way, for me, it's kind of hard to pinpoint when exactly it's going to do that. So I like to get in on these trigger points. The trigger point, I don't know if you can see it, but it's this green line that runs all in between here. This green line, it changes color. When it's green, it's in between. It don't know if it want to buy, it don't know if it want to sell. But when it knows when it wants to sell, it turns solid red. When it knows it wants to buy, it turns blue. But when it's in between, it don't really know what it want to do. It's green. I want you to write that down. Because when you see green, stay out the markets. But when you see red, it's time to get in the markets. Now, how do you get in the market? You have this trigger point, this thick line. You see you have a sell right here? Sell. But if you don't see a sell, I'm going to show you how to still get in. So look, you would have sold right here. And mind you, all of these positions are for 3 candles unless it's a reaction off of a point in structure. And I'll go over what that means. So all of these are going to be for 3 candles. So if you're on a 15-minute time frame, 15 minutes times 3 is 45 minutes. But what I mean by if it's against a point in structure. So let's say I have my resistance. Excuse me, in this candle goes like this. And it needs to come back down. That is the only time I would do a position based off of how long the candle is. That's the only time. So in this case, when it goes and it comes above, it needs to come back. Or, let me see. Or when it comes down, it needs to come back up. That is the only time. I'm taking something for. All right. So boom. When it comes down and needs to come back up, I would take it for 15 minutes. Or when it comes up, needs to come back down, I would take it for 15 minutes. Any other time, I'm taking it for 3 candles. 3 candles is whatever this is times 3. If you're on the 5 minutes, 15 minutes. If you're on the 15 minutes, 45 minutes, on an hour, 3 hours, so on and so forth. So how do you get into the markets? You have the sell signal. If you get a sell signal, sell. You're going to win some, you're going to lose some. Like right here, you won. Right here, you lost. And you could have avoided this loss by what we know about market structure. Because guess what? I told you if it's green, it's in between. When it's in between, get out the markets. So I probably wouldn't have got back in until right here. It says sell, I sold. Sell, 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 sell. It used to be to the point where you had to figure this out on your own. I bet. I bet. So it used to be to the point where you have to figure this out for your own, but 9 times out of 10 is gonna give you one of these. So guess what? Come back, sell. Guess what? It comes back, sell. You would have avoided this by market structure. It's green, it's in between, stay out. Boom, sell, sell, sell. All of this you can avoid. Sell, sell. See, this is what I like about WebSinger now. It's so accurate. You don't have to figure nothing out. Like it just gives it to you. Boom, 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 boom. It just gives you the answers basically. So we just went like 10-0, bro. We just went like 10-0, and how long was this? Three days? No, this was 2 days, basically. Over the course of 2 days, all you had to do was plug in. It literally gave you every position that you needed to sell. All it is. Let's count. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23. 23 wins in 2 days. That's crazy. Now that's crazy. And that's just off of this. This is on one strategy on one pair. See me. One strategy on one pair. That's not counting if you go to USDJPY. The same rule applies. Look at all of this. Look at all of this. You could have got in on all of that. It's just a matter of plugging in. So, with that being said, I hope y'all got value from what our Liberty Scanner has to offer. If you have any questions, my Instagram is in the bottom left corner, or if you go to participants post, it's right there. You can ask me any questions, but unfortunately, I gotta jet so I can make it to where I gotta go before this op call. So with that being said, Y'all have a good rest of y'all's night. Plug your guest into the guest webinar. I'll be back again. Let's get it.